So what is the best way to prepare for this week's US CPI and PPI numbers that come out on Thursday and Friday, especially with regard to things like the DXY with the trading right here within this congestion, and also the euro and the pound? That's what we're talking about in today's video. I'll discuss key levels and some outlooks for these markets. All right, now if you do want my help with your trading, guys, including lifetime access to our Discord group and also course, the Discord group includes daily videos, exclusive charts and setups, seeing my trades in real time, and much more. I want to clarify that there are two ways to join. You can either pay outright, which see the link at the top of this video for 90% off lifetime access to the group and the course, or the second way to join is to sign up with PrimeXBT or Blueberry Markets. Both of them are regulated brokers and both offer forex, crypto, commodities, a bunch of different markets. So you sign up with either one of those and deposit $500 or more. Okay, so again, the first way to join, pay outright. The second way to join is to sign up with PrimeXBT or Blueberry Markets, deposit $500 or more, and then let me know. So see the links in the description of this video. All the links will be there. Or if you're on the website, click on the Join VIP link or scroll down from this video and you will see a link to PrimeXBT right there. So let's go ahead and get into this, guys. I want to walk through the DXY, the EURUSD, and the pound USD ahead of this week's US CPI and PPI data, because that inflation data is going to be critical for these markets and is likely to produce a lot of volatility here in the forex market. So before we get into the charts, I do want to look at the US CPI and PPI events that I'm referring to. So these are the two events here on Thursday at 8:30 a.m. Eastern. We do have US CPI right here. Okay, so these are the events right through here that I'm referring to. And then on Friday, we do have US PPI. Now, between these two, between CPI and PPI, this one right here, CPI, tends to be the bigger hitter, producing more volatility than PPI. However, both are going to be significant just because markets are hyper-focused on inflation right now, particularly investors, because they really want to see inflation come off of these forecast numbers over here in order for the Fed to be able to cut rates. I have my own thoughts on that in terms of what rate cuts could mean overall, longer term for things like the stock market, but maybe that's for another video. But for now, just know that these forecast numbers over here, which you can see this information on the Forex Factory calendar, which is the one that I recommend. You can see these forecast numbers over here for CPI and PPI. The bottom line here is that if these numbers come in higher than forecast, okay, that is going to be potentially bullish for the DXY. If they come in lower than forecast, then that could be bearish. Now, if they come in at forecast, that's a little bit more ambiguous. It isn't going to give us a whole lot of clues here, but that's a case where it's probably just best to let the market kind of play out and go from there. And on that note, guys, I really think that that is the best policy with these markets, whether you're looking at the EURUSD, the pound, etc., is it's always dangerous to trade ahead of CPI or PPI, FOMC, etc. Regardless of what it is, guys, it is always dangerous to get in ahead of those events. So the best thing to do is wait for the event to pass and then go from there. So let's start here with the EURUSD. We'll go on to the pound and then talk about the DXY. So looking at the euro, guys, we've talked about this trend line off of these recent highs here going all the way back to 2021. And you can see the lows here. We've got this trend line down here. Okay. So this, again, very much like the DXY, this is why we're just seeing this sideways consolidation here for the past year and a half. Now, this one, you can see where if you look at the daily chart, all right, this is starting to get a little bit interesting because we've seen a couple of fake outs, okay, failed breakouts from the euro from this level here on the daily. So back here, this was a failed breakout. You can see this up here was also a failed breakout. Now, you can see where it was respected through here as resistance, again, through this area. And once again, even here, okay? So I know that this level is significant, especially on the weekly time frame. And fake outs like this, guys, by the way, this is what the course teaches. Okay, so the course that I just launched, it does teach how to trade this stuff, how to trade away from it. And honestly, guys, this is some of the most high conviction stuff that I found in my over 10 years of trading experience in the Forex market. Now, looking at the recent price action, this is what we talked about earlier this week, where this right here could also be, potentially a failed breakout. Now, what's interesting is that we did see the EURUSD close below this level here on Tuesday's candle. Now, the issue with this, though, is twofold. First of all, this is not convincing enough for me to call this up here a fake out. Okay, second, we have CPI and PPI coming up. So do you really want to go getting into a market like this ahead of those events? Because the fact is that even if you get this right, even if, let's just assume that you short this market and you're correct and the euro drops. even if you get that right, guys, unless you have a very wide stop, you are likely to get stopped out during the volatility. And it's not just the volatility, but you're also going to get widening spreads during that volatility. All right, so a lot of slippage, etc., where there is a good chance that you get stopped out prematurely before it has a chance to work out in your favor. So this is why I often say that it's better to get in on a retest rather than look for the initial, long or short when the market is still trading at that level. So in other words, if we get the EURUSD this week trading back down here, so if CPI and PPI come out higher than forecast, we get a bullish DXY and the euro trades down here. Okay, if that were to occur, then this up here, you're looking for shorts against this level next week. Now, of course, this is just my opinion as always. I am not telling you what to do. Whatever you decide to do is completely up to you guys. But if we were to get that, then we're looking, or at least I'm looking for shorts against this level next week. Now, if on the other hand, we do get the EURUSD closing up here in this area, all right, so closing up here this week, with CPI and PPI coming up, then that could set this market higher for next week. Because keep in mind too, that would be the first really convincing weekly close above this trend line here. We really haven't seen it going all the way back to 2021 since this level started back here for the euro. Okay, so you can see here on the weekly, even though it looks like last week did close just barely above this mark, I would say that this was a close right at the level. So if the EURUSD were to close up here somewhere this week, then that would be the first weekly candle above this key level. All right, but we're going to have to wait and see though what those inflation numbers have to say and how these markets react to them. Keep that in mind too, that really the bottom line is how the market reacts to it. So again, right now, the EURUSD is really trading right at resistance here following that close below yesterday. But I need to see more here from this market to determine whether this up here is yet another failed breakout from this level, or if we're finally going to get the EURUSD moving higher. Personally, if you'd asked me this a week ago or 2 weeks ago, I would have been looking for shorts against this area up here because I was bullish on the US dollar. Things have changed a little bit now. I'm not necessarily bearish on the US dollar, but I'm more neutral than I was previously. All right, so let's go and look at the pound here and talk about this market now. The pound is actually leading a lot of the major currency pairs higher. So you can see where the EURUSD is trading right at that key level that we just looked at. So here on the weekly, you can see where this market is trading right there at that key level. And if you look at the pound, we've actually got this market trading just above, quite a bit above this key level down here. You can also see where last week did actually close above this. Okay, so this is the difference between the euro and the pound right now. And you can even see where this week's low, comes in right there at that key level that it closed above last week. So the key for bulls right now with regard to the pound, and this is very simple in my opinion, really it comes down to, can bulls keep this market above, this area up here? So right around 127.70. So you can see we've got this swing high back here. We've got this one and all these highs. You can also see this retest right here this week. Okay, so as long as the market stays above this key area down here, then longs are favored. However, here's what I'm going to say about this, and this is what I told VIP members this week. Okay, in fact, just in yesterday's video, we were talking about this, how these highs right back here, this is the issue with trying to long this market, where if you got in down here, if you were able to get in down here, then in my opinion, this is more of a short-term trade up here toward these levels, because this is not an area where I could justify looking for longs for something long-term. And the reason for that has to do with all of these highs, because even this high going all the way back here toward 1.29 or so, this right here prevents me from longing the pound for a longer swing trade just because you've got this high right back here. So this could easily be something like this, where we get the retest up here, maybe even sweep it, come down here, test this level, close back below, and then sell off. So this is why, again, I can't justify getting long this market when you've got highs like this up here standing in the way. But at the same time, I'm also not going to short this market because we did see it break out from this level last week. So the only way that this becomes a short for me is if this market trades below here. If we get the sustained break back below this, then this up here becomes a failed breakout and I'm looking for lower levels. Now, if the pound were to close above this high up here, up in this area, get a sustained break above 1.29, then that, of course, would set the market higher toward levels like 1.3 and potentially up there toward like 131.40. All right, now for me, I would love to see this fail just because I do like to play failed breakouts. Again, they are some of the highest probability trades out there in these markets. But we'll have to wait and see how this goes, guys. Again, US CPI and PPI coming up. So that is really going to determine what we get here from the pound. Again, whether we get the sustained break back below that 2021 trend line through here, or if we finally get it taking out some of these highs up around 1.29. All right, so last up, let's take a look here at the DXY. And if you guys have followed this channel and website for a while, you know about this larger channel back here. Okay, so going back to the start of 2023, you can see where the DXY has traded within this massive channel. And we've also talked about the fact that this market is trading back below a channel I had drawn off of these lows. Now, I'm not ignoring that. I want to be very clear about that the level right now for bulls to get back above is going to be 105.50. Okay, so really this horizontal through here satisfies that channel that I used to have on here. Okay, so this is the key level right now that bulls have to get above, resistance for now, right? But I also think that you've got to be careful getting bearish on the US dollar just because we do have the market hovering just above this trend line down here. Okay, so this could come into play here over the coming days, depending on what we get from CPI and PPI. Now, we could get a bounce from here. We could also get a breakdown from this, right? So I think that the next big move here for the DXY, just in terms of, looking for swings in the market, I do think that this area down here is going to be the one to watch. So if we look here, right, this comes in pretty close to that recent low, right around like 104.7, 104.8. Okay, so this area down here is going to be the one to watch. If the DXY can hold above this and bounce from this area, then I do think we could see a move back here toward 105.50. Now, obviously, if this breaks down, then we're looking at a move down here toward 104. And if we don't get another run down here at this level, and the DXY instead reclaims levels like 105.50, then we're looking at a potential push back here toward this resistance level, okay, off of these recent highs. So these are the scenarios I'm watching for the DXY. One, we either get a bounce down here and a move back toward 105.50, we get a breakdown from this for a bearish dollar, or we simply get a move up here, reclaim 105.50, right? So for now, if you can't tell, guys, I'm not really interested in doing much with these markets as things stand, especially ahead of US CPI and PPI. Again, I think it's really a mistake to get in ahead of events like that. The best thing to do is to wait for the aftermath and wait for things like the DXY to make up its mind in terms of, do we get a 105.50 reclaim or do we get a break below this trend line? And I think that the number one reason people forget about that or ignore that fact is that they have this FOMO as if the market's going to take off without them. But I'm here to tell you guys that regardless of where this market goes, okay, regardless of what the DXY does here over the next few days, really the much, much bigger move is going to be what we get out of this pattern. Because the direction that this breaks, all right, you're looking at, a break lower targeting these lows down here, potentially the bottom of this larger channel, and a break above this, okay, up here, targeting these highs, and potentially this area up here. All right, so there is a ton of room, between this breakout up here or this breakout down here. So there is no reason to FOMO into a move right now, just because the eventual breakout that we get here, I think is going to be well worth the wait. Subscribe to the channel and click the bell icon for notifications. Don't forget to join us in VIP. Either pay outright, join Prime XBT or Blueberry Markets and deposit $500 or more. See the links in the description of this video. Trade well out there, be safe with the upcoming volatility, and I will talk to you again tomorrow.